Hello and welcome. Payroll is an integral part of running most businesses, even if it's only for yourself. The taxes that go along with payroll may seem a bit complicated, so I'll first simplify the concept and then break down into more detail what you're paying for and where your taxes are going. If you are one of our payroll clients, you will receive a depository totals report along with your payroll. This report breaks down your payroll taxes. I've created the simplified version of the depository totals report. I have substituted figures in the simplified version to make the concepts understandable. These are in no way the actual accurate figures, which will be used later. In this example, you are paying your worker $900 for wages, as you can see in gross pay. However, you are cutting him a check of $800 reflected in net pay. That is because you are withholding $100 from his paycheck and making a payroll tax payment on his behalf. You are also paying your portion of the payroll taxes, which comes out to $100. As you can see, the grand total is $1,000. The difference between the grand total and the net pay is $200, which are your payroll tax payments. To recap, the payroll to your worker is $900, but you pay him $800. The payroll tax payments you make are $200, which are $100 paid on his behalf for his payments and $100 paid for the employer side of payments. Your total amount paid will be $1,000. The actual figures used for this example are somewhat close. In this real example, you are cutting your worker a check of $771.91 for net pay. Boxed in blue are the amounts you're withholding from your employee's check and paying on his behalf. This is the employee portion of Social Security and Medicare, his federal income tax withholding, his state SDI if it applies, and his state income tax withholding. Social Security and Medicare are federal taxes that are split between the employee and the employer. So the employee pays 6.2% and the employer pays 6.2%. The same with Medicare, with the employee paying 1.45% and the employer paying 1.45%. You can see the employer portion in red. In addition, the employer has to pay for unemployment insurance. This rate applies to the first $7,000 earned by the employee in that year. The IRS has set a schedule for when you must make your payroll tax payments, depending on the amounts that are due within a 4-quarter period. But if your quarterly amounts due were less than $2,500, you can make your payments quarterly along with your quarterly payroll tax filing. If your amounts due for the 4-quarter period were less than $50,000, then you would make monthly tax payments. If your amounts due were greater than or equal to $50,000, you would make semi-weekly payments. I hope this gives you an idea of how your payroll taxes work. If you have any questions specific to your business, you can post them on our website on our Ask Harry page. You can also visit the IRS website to download the circular regarding payroll taxes. We can provide our services remotely at your fingertips, and so we can service any location across the United States. At JHK CPAs, we provide full-service accounting and tax services for small and medium-sized businesses. For service inquiries, you can contact us at the information listed below. Take care, and thank you for watching.